Thank you all for being here today. My name is Brophy from SAS Institute. I'm in our risk advisory service. And we're going to be talking about modeling certainty and how to manage risk related to pricing models and risk models. I've been in this business for a long time. I've worked in the banks for over 20 years doing risk and analytics. And the comments that Peter Serrato started us off with this morning ring true to this space as well. We've seen, in the same way he mentioned, the transformation of going from having to go into a physical bank and have physical checks being passed back and forth and physical records, to now a fully digitized and automated banking experience is similar to what we've seen in the world of risk and risk modeling. And I saw that in my own space where I started out building risk databases to capture the data necessary to build models. And we went from paper scorecards that were used to evaluate commercial credit risk to now I can't get through a conversation with a bank where we don't talk about artificial intelligence or machine learning models and how to automate this and try to do it better and faster with greater depth of information. And so towards that end, when prepping for this, where I can't get through a conversation without talking about AI, I was talking with Curtis, and you had an interesting counterpoint to that. Do you mind sharing your thoughts?
Yeah, I mean, I think in the mortgage insurance business, we're a little unique in that, most AI solutions require you to send your data elsewhere for some type of analysis. And of course, as a mortgage insurer, we're B2B, and we don't own our consumer data. So we have some extra challenges in that respect. Traditionally we can send our customers' data to the credit bureaus, Equifax and TransUnion, and those become sort of the main basis for our models. But we are probably going to look at mining our text a little bit better.
Sure.
But that's probably, again, going to be more traditional. It's not going to be necessarily something I would call AI. The other challenge we have is that delinquency formation is, knock on wood, thankfully quite low. So we only get 30, 40, 50 new delinquencies every month. So, it's not like our models need to change super often compared to, say, like credit cards or something like that. So,
yeah.
So I think I think there is probably something eventually, but right now that doesn't look like a massive opportunity that we're missing.
I understood very well. And Fabian, I thought you might want to comment on the use of AI models or not, given that at your role at Scotiabank, AI is in your title. Maybe you could share your thoughts with us around that as well.
Hi everyone, thank you for the invitation. In Scotiabank, we have used AI for many years. And I like the way the previous panel,
You're good.
Yeah, the previous panel split the use of AI, traditional AI such as machine learning models that we have used for many years, especially when we had large amount of data, where we had demonstrated that AI is superior to the traditional techniques. Also, we are using traditional AI in credit risk. We're using large volumes of data, deposits, transactional data, and with all this information, we had a better understanding of the probability of default of the clients. And now we have the family of large language models of generative AI with the boom of ChatGPT and other ones. We had started to explore during the last probably 2 years some use cases focused on productivity, how we can increase the efficiency of our team, for example, code documentation, translation of code from different language. And I think really interesting, exciting, because we had some use cases where this manual task that had taken days or hours, now we are doing in seconds. And I think it's a good opportunity to deploy some additional time for our team in activities that are adding more value. So large language models mainly in automation processes.
Wonderful. Evan, would you have any comments on this you'd like to share? Yeah.
I would just reference the very first session this morning where a lot of the use cases or the discussions around this were focused on productivity enhancements, and you've got to watch the opportunity versus the cost of your doing business and not just be putting asphalt or pavement on the cow trails or the horse trails. There are different things or completely new things that can be done or products offered that wouldn't be possible without this kind of technology, and then the whole rest of all the other issues come into it on how are you doing it responsibly, how are you doing it in conjunction, in compliance with regulations and so on.
Yeah, very good. Well, we'd be remiss if we're talking about risk models and pricing models within a banking industry that's highly regulated without talking about the player that's always in the room, and that's the bank regulators themselves. And up here in Canada, we have E23 that's certainly a hot topic, and so that certainly plays in this space. And so maybe, Fabian, could you talk with us a little bit more about that and how that's impacting the work that you do?
Yeah, for sure, E23 is the trending topic, in all the associations of the financial institutions, because we had a meeting last week with the big 6 banks, and we expect with E23, our inventory is going to grow around 50–60%. And this means a lot in terms of our processes, because it's impacted the model life cycle, we're going to need more validators, how we're going to affect the monitoring of the models. And now we have a new definition of model, and we had the discussion, okay, a large language model that is using a summarizing of tests is a model, and according maybe with the regulation, yes. You had an spread Excel sheet doing a pricing calculation, is this a model? So it will bring a lot of implications for the organization, and we are planning ahead, designing some kind of what we call risk rating for the models, because there's no any way that we're going to absorb all this inventory and we cannot have an army of validators. And I like what comes that they explained in the first panel of the AI. This framework needs to evolve because this is moving so fast. So we need to create a framework of model governance that can give some kind of flexibility to promote innovation, but on the other hand, to have the use all those models in a responsible way and with the right guardrails.
Very good.
Yeah, so I think for us, it's actually going to be transformational in the sense that, as an insurance company, previously or currently on paper, we don't actually need to comply with the E23 guideline. So we do sort of follow very roughly, validation, vetting, all of those good things on certain sets of our models. But I think it's going to be transformational sort of in tandem with sort of, I'll call it Peter Routledge's OSFI, which is very different than Jeremy Rudin's OSFI. Under Peter, they're very, very clear now that it's, not just the quantitative aspects of how you sort of model, sort of govern models and stuff. There's going to be, and we're already feeling it, as I'm sure other model people in the room are, they have different opinions on what the definition of a model is, as Fabian mentioned. They have different opinions on sort of qualitative things that didn't really used to be sort of something someone running models would think about. It's a very quantitative space traditionally, and now this qualitative aspect is sort of a new spanner in the works that I think we're all going to have to sort of, there's going to be a lot more back and forth with the regulator in the future where, you'll make an attempt at something and you'll see, is that good enough or not? And so it's going to be a pretty big challenge, I think.
Yeah, I would agree with you. Now, my banking experience was down in the States, and when SR 11.7 went into place, we had a lot of those back and forth. Usually the regulators won with some swift kicks to...
Yeah, precisely. I mean, they can always win. And Peter, I think, again, he's looking like, he's going to use more tools in his toolbox. His definition, if anyone gets the chance to sort of see the notes, he spoke at the CD Howe last week, and he is going to use those qualitative tools in his toolbox to get more out of a more stringent governance structure under models. He was very clear with that.
Yeah, absolutely. Now, Evan, your role at Trust Science, you operate on both sides of the border, as does SAS, and I think you'd have an interesting point of view on this as well. Could you share your thoughts?
Yeah, in general, throughout my career, I've observed that the U.S. is on various fronts or various topics 3 to 5 years ahead of where we are here. The whole country here is approximately the size of the state of California. what we find, or what makes a lot of sense, is operate to the highest bar. Don't run away from the regulators. E23 is not a bad thing if you're trying to do AI or any kind of modeling responsibly. Make sure that when the regulators or others are looking at or talking about benchmarks, that you're not looking at a corrupt or a toxic benchmark for the work that you're trying to do, which maybe I'll offend some FICO people in the room or others, Beacon. The benchmark that you're using may or may not be the state of the art, or may not be capable of ingesting. It wasn't designed to look at all of the data. So I've been on other stages in the US and in our dealings with regulators doing workshops and white papers. What I say is I add. It's about the data. It's about the data. It's about the data. And so you may be a GSIB class bank at the top of the heap on the global stage, but you're still only seeing your data, and being able to train your models or do things that the regulators would recognize as being more comprehensive. Remember, their mandate and their responsibility is to essentially always comes down to the lowest common denominator being the consumer. And so that consumer protection, where in the US that bar is very high. In Canada, it's not as high. In the US, the privacy bar is low, where in Canada, the privacy bar is very high. I love the statement made 2 sessions ago that you want to be on a platform. Like if you're just trying to throw random vendor stuff or your own stuff or things in the lab at a problem, you're in for a lot of hurt, or the risk of your hurt goes up. So if you look at E23, they're talking in terms of platform, they're talking in terms of surrounding and mitigating protections or offsets to model weaknesses and so on. Take all of that into account. This is not something that gets put together in a sloppy manner, and then your marketing department sprinkles the letters AI on top and it's supposed to work. It doesn't work like that.
Yeah, isn't that the truth? Sorry, Curtis, did you have more to say?
I agree with what Evan's saying.
Yeah, wonderful. So, and I see that as well. Like, I'm not kidding. It's hard for me to start out a conversation with any one of our clients in any of the banks of any size without AI coming up quickly, right? And in my head, being in risk management for as long as I was, like alarm bells go off. I often worry about like all the things that you should worry about when you're thinking model governance. But Fabian, you are right in the heart of all of this right now at Scotia. So maybe could you talk about some of the challenges that you face, and maybe not specifically at Scotia, but more industry-based, on implementing AI models and expanding the use across the organization?
Yeah, for sure. And Evan mentioned this. Data is probably the main one. Garbage in, garbage out. If you don't have the right data, can affect the effectiveness of the AI model, even traditional models. So it's really important that you implement some process of data quality, data governance, data steward, even before going with AI. For sure, explainability is a challenge with AI. So don't necessarily choose the model with the more power operation. Choose a model that you can understand, that you can explain to the organization. I say probably it's one of the main one. With any new tech, you have a culture change, of change management. So we are creating some kind of awareness or use of the AI in the organization, that the people can understand what are the risks, but also to trying to remove some kind of the resistance to the change, because you can have a good solution, but people are resisting to move into production, and I think this is critical. Other important point is communication, and collaboration with all the stakeholders. Just ensure that on the table you have compliance, you have risk management, that all the organization has visibility of the use cases. Because if you work this in a silo, independently, just from the quantum side, the probability of success is low, because you're going to have a lot of roadblocks, from the, you can call traditional organization, to trying to understand the risk. And here, basically, there are risks that we already know, cybersecurity, data, but others that are new for the organization, like hallucination is a big one, data bias. So just ensure that you communicate across the organization, but I say those are the main roadblocks.
Yeah, sure. Curtis, would you like to share any thoughts?
Yeah, I think the way we look at AI is, and where the early cases, it's not so much on the modeling side for the reasons I sort of mentioned earlier, but the productivity gain, I think, is very real. And, you know, getting your smart team to, you know, as the regulatory expectations go up, so, you know, to get a quick start on compliance and documentation and policy writing, always with a human, but that's where we're seeing the kind of early gains with AI. It's not necessarily on the modeling side, it's on all these other things that we have to produce.
Right, very good. Evan, do you have any thoughts to share?
Only that
Yep,
the opportunity is not necessarily something that's presenting itself in, you know, full color and high definition, particularly when the technology is new. We've never had as much positive response to something that we right now have in the lab. I have to be careful not to reveal it, or my new president over here, Matt Browning, will have me in a headlock, but I'm always selling as a vendor. The response to something that we have in the lab has never been higher in any of the other technology commercializations that I've done, and the opportunity to change the game or to be competitive against really strong incumbents pretty well depends on that age-old human ingenuity. Don't ever bet against human ingenuity. Yes, there will be missteps along the road, and obviously Fabian and others in his industry can't take or suffer those missteps. So then just make sure that you're setting up a proper test, make sure you're setting up a proper pilot, make sure that you're running it for a sufficient length of time. Invoke the services of the SaaS institutes of the world. They've done this a million times before. And in that way, harness resources and innovation that maybe you're not allowed to or can't by different restrictions do for budget reasons. It could be as basic as budget reasons, but I know that a lot of our customers as lenders wouldn't be able, they are not attractive to some of the employees that I have on my team. So PhD class or caliber people who are thinking and actually inventing that new space. That's a vanishingly small fraction of the population. But you go to where they are, or you put something up in a production grade infrastructure or platform, and that's how it proliferates. So that's how it gets made available to the wider economy. And so Stephen, who was just talking before us here, in competing with the super majors, you have to be applicable and approachable by the consumer. And by the way, that consumer, they're young.
Yeah.
They're immigrants. They're self-employed. They're a lot of them who are being underserved or not served properly are willing to take more risk. When we heard from Peter at the very beginning about, you know, doing a purely online bank account, that was not something that was normal in 1995, and here we are.
Mm-hmm. Yeah, absolutely. And when I think about this and some of the issues that you touched on there, and Fabian, you were talking about like the use of AI models at Scotia, and the talent pool that can develop those models is actually very thin, right? And you have to compete fiercely to get those PhDs or masters in statistics to join your squad. And I know because I used to be in that game. And there's a big challenge, and I think there's a room for opportunity for all institutions in the financial services space, is to how do you take the understanding of AI models and the use of AI models out of the hands of just purely the PhD space and democratize that and allow for the use of those analytics, those high-powered analytics across your organization to drive efficiency or to make better decisions, right? And those are certainly things that we try to work on at SaaS, but again, it comes up over and over again in our organizations, right? And I'm sure you see the same thing at Scotia, right?
Yeah, for sure. And I would say, don't be afraid of using AI in the organization. I think AI is changing the way that we work, the way that we interact with our customers. But I agree with Evan. Start with pilots. You know, I think we call this a champion challenger, where champion is the traditional methodology, and you have the challenger. And when you have demonstrated the value, you know, you can estimate the benefits, and also understanding the risk and implications, you can move to a large scale. And I think pilots is critical of the AI. I think with the open banking, I think AI is going to be even more important, because you're going to need decisions real time in terms of risk assessments, pricing, tailor-made offers. So I think it's really important that you start to pilot, you know, to understand the implications. But I think don't be afraid of using AI, but work in parallel to creating your AI risk policies. You know, what is the framework that is gonna, the policy that is gonna guide the use or implementation of AI use cases in the organization. So you need to promote innovation, but with the right balance and safe guardrails that we need to promote AI in the organization.
Curtis, could you maybe talk about that balance between like the need to evolve and quickly and compete with those GSIBs versus, you know, taking a more structured and cautious approach to make sure you're not onboarding too much risk?
Yeah, I think the way we're looking at it is because, you know, the productivity gain is sort of something that's talked a lot about. So trying to figure out a way that we can safely start to roll out, even if it's, you know, like a Microsoft pilot sort of thing, getting more of your team, sort of encouraging them to experiment with ChatGPT and do these things in their everyday jobs. And then, you know, like you said, Fabian, we do sort of have to very quickly put sort of a governance framework around that for all of our companies to make sure people don't start crossing the line, make sure that they don't send data outside the company, make sure that you have those safeguards. And we're particularly sensitive to that as a B2B, because again, our data, you know, is the lenders, it's the bankers' data, so we have to be custodians of that data as well. So we have to be very conscious of that.
Yeah, absolutely. I think we're getting close to getting the hook, and I'm mindful of trying to keep us on time here. And so, Curtis, maybe for some closing thoughts, just around the broad topic of managing risk models, can you share your thoughts with us? Yeah,
I think in closing, I think the big thing for us, since this new E23 is going to be new, we are going to have to dedicate, you know, more resources around that. I think one of the particularly interesting bits now is, you know, as an insurer, actuaries play a big role in a lot of the models. Historically, there was sort of an agreement in the country that, you know, actuaries would develop their models, they would get sort of vetted and validated by, you know, another actuary, and that would be sort of, you know, what you would have to do. E23 is my interpretation is that's still going to exist, but it's not going to be enough anymore. So, you know, we have things like stress testing models, which, you know, the regulator wants to see them revalidated on a regular scale now, even though there's no extra information about the tail. So we're gonna, you know, we're wrapping our head around what that actually means. So there's going to be a lot more challenges, and now with the regulator being more qualitative, there's going to be a lot of back and forth on, you know, what's a good enough stress testing model.
Yeah, of course, yep. Evan, would you like to share something?
I would just say don't reinvent the wheel. There's a lot of things that have been done on this, whether or not you've only just started hearing about it or whether you've been working in the field for the last 10 years. GPT 4.0 just got announced 2 days ago. Things like what Christine said in the earlier panel about partnering with a platform, allowing yourselves to self-build your own models. You don't have to rely on outsiders. You don't have to reinvent those wheels. Allow yourselves to build your own. Make sure that your own people are building the strategies and the policies with a decision engine on an integrated platform. Make sure that it's protected, because the big banks in this room, you're the deep pockets. If there's a patent infringement, the action, especially in the US, but also up here in Canada, is called contributory infringement. If you're using something that's not properly patent protected, you're in trouble. You've increased the risk on 9-figure types of settlements that you're now hearing about because of how fast the field is moving. We've got 65 patents in 13 countries around the world. That's not an accident or an optional nice to have.
Very good. Fabian, closing thoughts?
Yeah, I agree. E23 is going to change basically the financial landscape, but I think it's good in the way there are models that were not part of the inventory, and I think it's good to have documentation of the models, all the risks, but E23 is not independently of the AI risk, and I think that probably, from my view, E23 is going to be a little more complex of the US, because there are specific, domains and questions about how we can use AI in the organization. So I think that there are exciting times because we can innovate, but also we are creating the right governance across the use cases in the organizations.
Wonderful. Well, I want to thank the panel so much for your time in preparing for this and for your comments today. And thanks to the audience for attending. Thank you so much.